All right, we're back. Park walks with Andrew and Geoff. Park stories with Andrew and Geoff. Okay, got a question.
Yeah.
Lessons learned as an investor through COVID.
That's a very good question. Well, we did a thing with Willow Oak where we talked about some of that stuff, and I think one of the biggest ones is not to be too short-term focused in terms of like thinking you missed out on an opportunity and beating yourself up for it and stuff. Because that's the biggest comments I get from people now is like, oh, I missed this big opportunity, and then they might do something stupid now because these stocks went up or whatever. So like the regrets from it. When there's something like this, kind of like 1987, there's a big decline and then big rise right back from that. When there's a big drop and then a big return from it, people are like, oh, that was the opportunity of a lifetime, which it might have been.
Yeah.
But then you missed out on it, then that's what happened. You got to move on from that and not worry too much about the fact you missed out and like, okay, if it happens again, then I have to be ready to buy it, or maybe I should be chasing these stocks now,
Yeah. Yeah, I told a story on there that somebody, and I've talked about it on the podcast too, he was a good friend of mine. He's like, man, he was just beating himself up, and he was like, I just feel like that was an opportunity of a lifetime. And okay, maybe it was, but at the same time, there was a couple days where things got like incredibly cheap. And you talked about it too on the Willow Oak, just keep at it, right? We did a recent video, what to do when you can't find stock ideas, and your advice was just keep at it. Mm-hmm. And I would agree. I think the biggest lesson for me is the time to do work on companies is when stocks are at all-time highs. And this is something we always preach, but it's so important to build that database of companies that you would love to own, so then when something does happen that causes the market to sell off, you could, act decisively. The time to do research on companies, in my opinion, was not when the market was down, whatever it was down, Now, of course, because of COVID, you would have to do some sort of research to make sure that like they're going to come out the other side. But like the original like legwork, that was not the time to be doing that research.
Yeah. Yeah, and there's still lots of cheap things out there. I mean, things that have been negatively affected by COVID and are still down in like banks and some restaurants and things. Other thing, I was recently reading a Peter Lynch book, and he stressed this a lot. He's in time after time, he gets into these big turnarounds and he makes 10 times his money or something. He buys them when they're already up 2, 4, 5 times from the bottom.
Yeah.
It's like this stock went to $1, and then I bought it when it was at 5, and then it went to 25.
People anchor like that too. Even when and you can look at the company, you're like, okay, but it's still trading at 12 to 15 times earnings, and the market's still at like 26. But they're like, oh, but it's up 2 to 3 times already from the bottom.
Yeah. So, I mean, if you're going to anchor on that, at least anchor on both what was the all-time high in the thing and the all-time low, not just like what was it that way. And also, some of the all-time lows, I have to say, are like practically a day.
Yeah.
There are some that we talked about. I talked about Frost on the podcast and stuff like that. It was 40-something again, which is like where I bought it years ago. But I mean, I think you had to be on particular days. It was more like at 60 or something, So it wasn't like that. I mean, there was a lot of volume in a stock like that. If you happen to be buying that day, you could get it.
Yeah.
But that's the other thing to keep in mind is that just because it was at some level for a day or something, that would have meant you have to get out of whatever you're in and into that on that particular day. But I think the big thing is, not anchoring too much on what the price was at. You're not going to get the low that's gone and stuff. But ask like, okay, say it's not paying a dividend anymore. Okay, what dividend was it paying? Will it reinstate that dividend? Because we were talking about that with something. And I was like, well, if it ever does reinstate the dividend, if it's a solid stock, you now have a dividend yield of 11 or 12% or something. That's probably a pretty cheap stock, even though, yes, it has rebounded a bunch from like the very lowest price it ever hit. At least like anchor more on prices, long-term averages of what price it was at. What was the average price it was at last year? Is it a more useful thing than, I could have gotten in at 2 and now it's at 6.
Yeah.
But the all-time high was 20,
Yeah, got it. Cool. Well, thank you so much for being a subscriber. The app is in development for iOS and Android. A few people did reach out to me asking about that. So thank you so much for being a subscriber. We appreciate it. Email us questions, focuscompounding@gmail.com. We'll answer them just like this. Let me know if you guys like this format.
Don't let me know if you don't like it.
Yeah, don't let me know if you don't like it. Park walks with Andrew and Geoff. Bedtime stories with Andrew and Geoff. We're trying to come up with a name. So thank you so much, and we'll see you in the next video.